Welcome back to Cheddar, everyone. Here we are. Yes. Okay. Today we continue our Idea of the Month partnership with Seeking Alpha. We're going to talk some Snap here. The share's jumping Thursday after news that Google had offered $30 billion for the company in 2016, according to Business Insider. And joining us now to talk more about this is Seeking Alpha author Fred McClimans. Fred, it's great to have you as always. Thanks for joining us.
Oh, thanks. Glad to be here.
All right, so Snap shares up almost 3% today, but still hovering near their lows. Of course, the low was $11.90, now at $13 a share today. You think it would have been a wise move for Snap to potentially sell to Google, given what we've seen happen in the stock since its IPO?
Well, there are a couple of aspects to this question. First, would it have been a good move for Snap at that point, given the rumors that suggest it could have happened in 2016? There are also rumors suggesting it could have happened as recently as just prior to the IPO. For Snap, yeah, that probably would have been a decent move. For Google, however, Alphabet, I'm not so sure that it really makes sense given Google's, what's the way to say this, propensity for killing social networks.
Yeah, well, of course, we're going to be getting Snap's earnings next week. And one thing will be fascinating to watch is how many new users was Snap able to bring in the last quarter. Will they be something like Twitter, where they brought in basically no net new users, because everybody's flocking to Instagram daily stories? And on that topic, there's been a lot of reports about how advertisers are now flocking away from Snapchat because they just don't see it as a booming building product anymore. Is that kind of the same situation that you're kind of seeing, because everybody's now going to Instagram stories?
Yeah, we definitely see a shift in that direction, and it's one of the concerns that we have about Snap as an equity. The reality here is that if you look at what Instagram, even WhatsApp, what they're doing, even Facebook Messenger, they're able to replicate what Snap does in software very quickly. In fact, probably even take an edge or a lead in some ways. And they have such a significantly larger user base to tap into. Remember that Snap's core demographic is still that 17 to 24-year-old demographic, and they've got a really solid lock on that. But when you're talking about really growing a business, you have to be able to attract the larger market, the larger consumer base, and Snap just has not been able to do that yet. In terms of new users, I wouldn't be surprised to see a slight increase, but I would be really surprised if they rolled out anything substantial in terms of user growth at this point. We're just not seeing the momentum there. Now, in the younger user base, I know my son is 14, and he's an avid Snap chat user. They love it there, but they're not really using it in a way that can be monetized through advertisements as much as you might like to hope for Snap's sake.
Fred, also, we know Snap's argument to this whole thing has been engagement, that people really spend a lot of time on Snapchat versus other platforms, for example. But in terms of what they're trying to do from the content side of things, where do you come down on that? Are you bullish? Are you bearish? Of course, maybe if Snap makes the whole process more transparent, that could get physically more content on the platform and maybe keep more eyeballs on for longer. What do you think?
Yeah, because we saw it today, for instance, Hollywood Reporter is reporting today that Peter Hamby show that's on Snapchat doubled the amount of the audience amount that it had from the last time it was on.
Yeah, so this is actually an area where I think Snap has a very strong advantage that they should be playing up much more aggressively. When you compare Snap to Facebook's Instagram, to WhatsApp and others out there, it's a software fix. Anybody can replicate that. But what Snap really does well is content. I find myself, surprisingly, more often throughout the day going to Snap channels to find a different perspective on content. And the content that's on there that's geared towards a slightly younger audience with a different perspective really is a bit of a differentiator, for Snap. But, let's kind of step back into the larger picture here for a minute. The whole idea of Google, paying something today, $30 billion for Snap, I think that's something that most people should just kind of push out of the side of their minds, erase it, delete it, purge the trash, whatever they can do, because I don't think there's any chance of that happening. And what, in fact, it really does highlight that should concern investors is that Snap, if you remember when they went public, they created a non-voting class of publicly traded shares. So unlike most other companies out there where you could see interest in a merger or an acquisition taking place, driving the price up, potentially even led by an activist shareholder or investor, That's not the case in Snap. Without any voting rights, it's very difficult for anybody to really force the sale of Snap. And until the management decides, yes, this is the right deal, investors are pretty much at their mercy.
And Fred, speaking to that as well, we heard that it could cost the company billions of dollars in the sense that it is not going to be included in the S&P 500, right? We know mutual funds, ETFs, they have to buy into that and they have to buy shares to meet their clients' needs. But in terms of that effect in the S&P saying that, look, we're not going to include you in the index. If you have this, of course, does not apply to pre-existing companies within the index, but it does knock out Snap. And so is there a way that you can quantify how that might impact the company and the shares, definitely?
Well, it's difficult to put a dollar value against that, but let me kind of equate that to user stickiness. You mentioned earlier about increased stickiness on Snapchat. Their average usage per day, I think, is around 30 minutes, which actually is a little bit below Instagram and WhatsApp at this point, I believe. I think the same thing is true with investors. Snapchat, it was a big name, it was a leading brand out there, became Snap, goes public. There's a lot of buzz about that, but you need to maintain interest in the investor community over time. And not being listed, in the S&P 500, I think that's a big deal for them. I think that significantly diminishes the stickiness factor and certainly diminishes the interest that a lot of funds would have in including that in their portfolio.
Okay, Fred, let's get to your idea of the month. CEVA, it just reported earnings on Thursday. What do you like about them so much?
Well, this is an interesting one because they beat on revenue, they beat on EPS. I think they had $20.6 billion in revenue this quarter, slightly off a 50-50 ratio between license fees and royalties. And yet since then, the stock has pulled back a little bit. We think it had been built up a little bit too much in advance, but from a long-term perspective, we really do like this company. They're a designer of IP, intellectual property, around programmable DSPs or programmable computer chips. What we love about this model is that it totally leverages every advance in technology and in information infrastructure, microprocessing, software, you name it, this model benefits from that. They're simply designing intellectual property for chips. And where are those chips used? Those chips are used in everything from emerging AI applications to IoT applications. And what they do is they license their designs to other chip manufacturers. So there's no hardware involved for them. There's no manufacturing. They've got a phenomenal control over cost of goods. They've got a phenomenal control over their cost of labor. And as more and more manufacturers, whether it's Intel or Apple, start to pull multiple components onto a single chip, the stickiness of CEVA's designs only increases over time. So once you've actually designed a chip using CEVA's intellectual property, there's really no incentive, for the next 3, 4, 5 years to reinvest in a different design at this point. So as this company grows, they get phenomenal economies of scale moving forward.
All right, Fred McClimans, author at Seeking Alpha, thank you for joining us as always.
My pleasure, guys. Great to see you.
All right, for more information on Seeking Alpha's marketplace, visit seekingalpha.com/marketplace.